Welcome, ladies and gentlemen. I am excited to be here with you for Level 1 of Foundations of Stocks and Options, and I'm most excited because tonight I am teaching you a version of Foundations of Stocks and Options that if you're here tonight, you've never heard it before. I actually put this variation together about a year and a half ago, and for various reasons, we ended up not using it. And so if you're here tonight, you're experiencing this for the first time, and I'm excited to share it with you. This is affectionately known as Foundations of Stocks and Options 2.0. But I've made some additional updates to it, so I'm calling it Foundations 2.1. All right, so if you're here tonight, then you're very special. You're also special, for those of you who've been with us for a while, you're special because this is a class that is 100% just for Trade Smart students. We don't have any scholarship students here. If you're here tonight, then you're a paid Trade Smart student, and I'm thrilled to have you with us tonight. In fact, I do want to do a quick poll here. I want to see how many of you are brand new versus how many of you are doing a retake here. For those of you who are brand new, you are in a class with a bunch of other students who've been through a program before. And so I'm just kind of going to do a quick poll here. This is for our own internal polling and information that we just need to get some data on. But we'll give you a couple seconds to do this. And as you fill that out, it's really simple. Either I'm a returning Foundations of Stocks and Options student, or I'm brand new and this is my first time. And either one, it's great. We love you just the same. But I'm excited to get going here. I also want to welcome a friend of mine. Sean Tate is here tonight. Sean sold me my house a couple years ago, and about 2 or 3 weeks ago, he called me. He said, hey, I'm ready to trade the stock market. So my buddy Sean is here, and I want to give a little shout out to Sean. All right, I'm going to close this poll out just for your own reference so you can know 64% of you are returning and 36% of you are here for your first time, which means this is your first experience with TradeSmart. So those of you who are brand new, I really want to welcome you to the TradeSmart family. You've made a great decision to join us, and you're going to find as you get to know more TradeSmart students, as you get to experience our live webinars, that it's a really cool place to be. I'm excited to be part of the, obviously it's my business, but I'm excited to be part of it and excited to have all the great students that we've got here. Those of you who are returning, if you run into some of the new people online, make them feel really welcome and share some of your tips and tricks. All right, here's our agenda for the day. Our class is going to look a lot like this next slide. There it is. Our class is going to look like a quick introduction into the Foundations of Stocks and Options program. And then we're going to talk about the chart, we're going to talk about your roadmap to success, and we'll discuss some action steps as we wrap it up this evening here. So let's get started. I have an objective for you guys, and it is an objective that serves two purposes. Number one, it serves you personally, and number two, it serves me because this is my mission. I am truly on a mission to teach people how to trade the stock market. And if I can deliver on that mission, then it's not only helping me fulfill my potential outcome here, my specific outcome, but it's also helping you fulfill your specific outcome. And so we're on this journey together, and there's going to be times when I'm expecting some feedback from you, and I want to know what works and what does not work, especially as I've already mentioned, this is a class that I've not really taught this particular variation a lot, so I'm always welcoming your feedback. Those of you who are retake students, you're going to recognize how different this class is, and I'm very much open to what your feedback is, as you'll give me some really valuable feedback here. But here's my objective. I want to help you put more money in your bank account with trading. And it's really that simple. If you're familiar with TradeSmart, you know our motto or our mission is to provide simple, results-oriented trading education. And the results-oriented part of that means that we want to help you put money into your bank account with your trading. So as we think about that, how do we start putting money into our bank account with our trading? Well, I got to thinking about this, and I said, to be a successful trader, there's kind of three cornerstones to building this whole thing up. We'll call it our trading fortress. And these three cornerstones are the right education, the planning and the execution of your trade, and then what I consider the mindset. If we look at all three of these, they're all equally important. Let's break each of them down just a little bit here. The right education is going to break down into three further subpoints. Number one, we've got the mechanics of the trade. We've got the analysis of the trade, and then we're going to have the strategies of the trade. This is where most people spend their time. They spend their time focused on, am I learning how to place a trade? Do I know how to do the analysis, and do I actually have strategies that work? In fact, if I were to really get specific, the place that most people spend their time is they get lost in the strategy. In reality, if you want to get focused on one key component that will put more money in your pocket than any other aspect of what we teach you, it's going to be the analysis part. And so you're going to find, I'm going to teach you all of it, but the analysis is where we're going to spend a lot of our time and a lot of our attention, because that's really the component that if you're missing it, you will not get the money flowing into your bank account. All right, so there's three components of the education: the market mechanics, the analysis, and the strategies. I will teach all of these. I will, in this particular series, the Level 1 program, we will be very heavily more on the analysis with just a little bit of the strategy. And in class number 3, you're going to get some of the market mechanics as well. All right, for those of you who are not familiar with this terminology, the market mechanics just simply refers to how do you place a trade. And if you're brand new, you've never traded before, how to place a trade. Hard to write and talk. If you're brand new, you've never traded before, this is really not focused on in this particular series. We focus more on the market mechanics in the very introductory series that we call Stock Market Made Simple. And so if you're brand new, you're probably going to want to reference the Stock Market Made Simple program. All right, the second cornerstone to building a trading fortress is the planning process. Now, you can have all the right education, but if you don't pull the trigger the right way, you're never going to hit your target, right? And so there's three components that I've broken this down into. One of the key components is a process that we refer to as trader conditioning. This is something that you're not going to learn about until level 3, okay? But the trader conditioning process is a process of conditioning yourself as a trader so that you can react to the market as a second nature behavior. Understand that when we start learning about the market, we're learning a new skill set. And the process of learning is you're going to learn the education, you're going to learn the information, and then you've got to turn the information or the head knowledge into a skill set that you can actually execute upon. That's what the trader conditioning process is extremely good at. And just so you understand where it came from, even though we're not going to talk about it till level 3, the trader conditioning process is a process that I developed for me because I was having the same struggles that many of you have. And so I did this many years ago, but this process that I'm going to put you guys through in level 3 is the process that transitioned me from knowing a lot about the market into the actual skill set of how to actually do the market, how to actually trade. So the trader conditioning process is a key component of the planning and the execution phase, or the execution component of building your trading fortress. The next component is writing and following a plan. And we're going to start this right here in level 1. By the time we're done with level 1, you will have written your first trading plan. And so we're going to start this component right here in the level 1 process. And then the other third aspect of the planning and execution phase is to measure your results and to adjust your plan. And so you can see we've got two cornerstones that we're building here. The first one is the education component. The second one is planning and execution. The planning and execution phase is going to drop down into 3 subcategories. The trader conditioning, which is where you really develop that head knowledge into a skill set, writing and following a trading plan, and measuring and adjusting the plan. Now, the third component, or the third cornerstone to building your trading fortress, is going to be the mindset. This is a component that most people, frankly, don't want to deal with. Most people, whenever we talk about trading psychology or trading philosophy, most people tune out. And the reason is because the words are a little bit charged. People hear the word psychology and they imagine, oh, I'm going to go in and put my feet up on a couch and talk to a shrink. That's not what we're talking about. What we're talking about when we use the terminology trader psychology is we're talking about the mindset or the philosophy with which a trader approaches the market. I can have 2 different traders that go through the same class. I teach both of them the exact same information. Both of them have the same head knowledge. They may have both gone through the same execution training. They may have gone through the trader conditioning process. They may both be able to do great analysis and understand the market, but the trader, which we'll call trader A, who has a great trading mindset, will have the edge and will actually be profitable, when trader B, who has a lousy mindset, will be losing money. All other components being the same, the mindset or the philosophy, psychology, whatever you want to call it, of the trader where in many, many cases, and when I say many, I'm talking 80, 90% of the students that I've dealt with on a one-on-one basis, the mindset is the difference that makes the difference. And so we're going to deal with that in our Foundations program as well. We're going to talk about developing a winning philosophy. We're going to talk about shifting perspectives. It is really, really important if you want to make money in the market that you abandon some of your old ideals, things that you've maybe held on to for years, that we abandon those in favor of things that are going to actually put money in our pocket. And so that requires a shift in perspective. And a lot of times that really requires a shift in belief structure, not necessarily like a spiritual belief structure, but a belief structure of what you believe about the market. For example, one person might believe that fundamentals drive the market. Another person might believe that the news drives the market, and another person might believe that human speculation drives the market. Which one is true? Well, we'll talk about those different perspectives and those different beliefs and how they shape the outcomes that you get in the market. Okay, so the third cornerstone to building your trading fortress is the mindset and the philosophy. And of course, again, broke that down into three sections: the winning philosophy, a shift in perspective, and your belief. Success is really not that complicated to find when we start searching for it in terms of the stock market. But what you're going to find is, in order to receive that, you're going to have to, in many cases, suspend your disbelief about certain subjects. You may already have a model of the world that says this is the way it should be. And if you really want to be successful, a lot of times you're going to have to kind of suspend that and look at what other people are doing and recognize that if I simulate what other people are doing, then I can replicate their situation. I can have similar results. And that's the way that you're going to start putting the money into your pocket, trading the market as well, all right? Now, these are the three cornerstones that I've broken down into building your trading fortress: the right education, the right mindset, and the middle one being the execution and the planning. But how many of you have ever seen a building that only has three cornerstones? Has anybody ever seen a building with three cornerstones? It doesn't work, does it? No, there's another one that's missing. What is the missing cornerstone, the fourth cornerstone? Christy, what do you think it is? It is you. It's got to be you. The fourth cornerstone is going to be you. I cannot give this to you. This is the part where you've got to step up and play. You've got to be committed. You've got to take action. You're going to have to do the homework. You're going to have to participate. You're going to have to play full out. I can sit here and give you the best I've got every night, and I promise you I will do that. Every time I get on these webinars and every time I start teaching, I always deliver the absolute best I've got. But despite the fact that I give you the best I've got, I expect you to give me the best you've got, because only when you give me the best you've got can I help you get to the outcome that you really want, okay? And here's my little quote: goals without actions are just dreams. So the four cornerstones, the fourth one being you. We've got the right education. We're going to give that to you. We've got the execution and planning. We're going to give that to you. We've got the component of trading psychology, the mindset. We're going to give that to you. The fourth cornerstone is you, and I expect you guys to give that back to us, not for my benefit, but for your benefit, because, of course, you got to participate in your own rescue. Now, let me give you a quick overview here. Many of you are familiar with this because you're returning students, but at least a third of you are brand new. And so let me just kind of give you an overview. Here's where we're going in the Level 1 program. In the Level 1 program tonight, we're dealing with an introduction. We're going to talk about support and resistance coming up in the next class. We're going to get into basic stock orders. Those of you who are returning, you're going to recognize that I've gone into much deeper detail of the stock orders. We're going to go into advanced line drawing. We're going to talk about an actual trend following system. By the time you're done with Level 1, you will have a trading system that is a profitable trading system that you can work with. All right, it's a trend following system. I'll be delivering that during this Level 1 program. You're also going to know how to write your first trading plan. You will actually write a trading plan by the time we're done with this program. We're going to do an introduction into options, and I'm going to teach you a class called the Ultimate Dividend, which is a strategy that you can pair up with your first trading plan. So you're going to love all this. At the end of the day, this program can stand on its own. At the end of the day, this program gives gives you enough information you can start making money in the stock market. It's not complete, though. The whole Foundations program is a 3-level series. You are all familiar with that. And when you get to level 2, we're going to get into the more in-depth reading of the market. We call this reading the markets effectively, market analysis, whatever you want to call it. But we're going to talk about technical trading really in depth. We'll do kind of a review of some of the line drawing. That's where we'll get into the chart patterns, the candlestick patterns, the indicators, the more advanced analysis part of the overall training. And then when we get to level 3, this is where it all kind of starts to come together. This is where the strategies and the plans and the execution and the mindset, all the components start to flow together in level 3 as we get into the trader conditioning. That's what I already talked to you about as one of the key cornerstones of trader conditioning. Trading options, more advanced options in terms of option pricing, option orders and setups. We're going to talk about creating a custom trading plan, okay, because not all of you are the same, right? Each of you are slightly different. And so you're going to learn how to make custom trading plans, and we'll deal with money management and trading psychology, okay? So all of this is the complete Foundations of Stocks and Options program, level 1, 2, and 3. I will be teaching level 1, 2, and 3 straight through for this 9:30 Eastern Time teaching. That means if you're starting with level 1 tonight, you can follow through with me next month for level 2 and the following month for level 3. Of course, we're getting into the Christmas season, and so there's going to be a pretty good sized break around December because of the way the holidays fell this year. We just couldn't get a full cycle in there, so you're going to have a big break. If you want to jump ahead on anything, of course, we've got the recordings, and you can jump online and watch the pre-recorded videos. All right, with that said, let's get into the opportunity. I want to, before I go any further, I meant to mention this at the beginning. There is a new notebook for this class. Did you guys all get that email with a link for the new notebook? If you did not do that, check your email. This is a new class. It's a new notebook. And so the one that has been posted online is not applicable for tonight. And if you're following along with the old notebook, you might want to try to print off the new one, okay? Moderators will help you out with that if you did not get one, and Ray is here as well. All right, let's talk about the opportunity. You know, I want you to create a mantra for yourself. And the mantra goes like this: there's more money-making opportunities every day in the stock market than I could do in my entire lifetime. This is a belief. We talked tonight a little bit about one of the key cornerstones of success is to have the right mindset. The successful trader has a belief that says there's more money and there's more opportunity than I could ever do in my lifetime. In other words, when we come to the stock market, when we come to the market starting to look for trades, we come to the market with an understanding and a belief that there is plenty of opportunity. Far too many people approach the market with a philosophy and an idea that they're hunting for a needle in a haystack. They're looking for that one great opportunity. And that is a philosophy, that is a mindset that will leave you in the poorhouse. Every successful trader that I know approaches the market with a core belief that says there's more opportunity than I could ever do. And so I just coined it into a phrase. And I said there's more money-making opportunities every day in the market than I could do in my entire lifetime. Consequently, because this is a belief, if I believe this, then whenever I come to the market, if I start to tell myself a story that says there's no opportunities, I can call BS on myself and I say, no, I know there's opportunities. I just got to look a little bit deeper. I got to look for a better opportunity or a different perspective for an opportunity. I want to encourage you to adopt this philosophy. Just try it for 30 days or try it for 60 days. And if you adopt the philosophy that there's more money-making opportunities than you could ever do in your entire lifetime, and those opportunities are coming at you every day, what you're going to find is every day you come to the market, the question is not, are there opportunities? The question becomes, which of these opportunities do I choose to take today? I have placed in the last 3 weeks with vacation included, I have placed around 9 or 10 or 12 trades. And of those trades, it's not specifically the fact that I picked those trades. The issue is the fact that I did not pick all the other trades. And what I'm getting at is there's more trades than I could ever chase down. I have a very busy life, a very busy schedule. I've been out of town for the last 10 days, And whenever you look at all the craziness and the chaos that we have in our lives, the challenge then becomes people start trying to run after everything. And I want you to encourage yourself, give yourself permission to adopt the philosophy that you don't need to capture everything. You just need to go out and capture what's there and capture a few of them and harvest a little bit. And if you get the philosophy that there's a lot of opportunities out there and you're just going to go harvest a little bit, guess what you're going to find? You're going to find that the opportunities are so abundant that everywhere you turn, you're choosing to skip out on trades. I don't even do all the power trader trades that we look at. All the power trader trades, we would go through just 10 every Sunday night. We go through those. And by the time I'm done with the week, half the time I come back and I'm like, oh, I should have done those. But I just didn't have time to think about all of them. You see what I'm saying? There's so much stinking opportunity. So let's talk about traditional wisdom. Traditional wisdom tells us that we should buy a stock and we should hold it for a long time. How many of you have grown up or you've listened your whole life to this philosophy that we should just buy a stock and hold it a long time? Right now, at this particular time in October of 2014, the stock market's been selling off a good bit. If you've been living anywhere other than under a rock, you recognize that. And if you've been paying attention to the news, the stories are fairly similar. People are starting to worry a little bit as the market has sold off. Is this a more substantial sell-off? And what kind of stories are you hearing? You're starting to hear people say, well, you want to buy the dip. Or Jim Cramer came out a day or two ago and he said, nope, this is not a dip that I want to buy. What are they talking about? They're talking about this traditional philosophy that says you buy all the time and you just keep holding and keep holding. When the market sells off, you buy more. And when the market runs up, you don't buy as much, but whenever it comes back down and we get a correction, it's a buying opportunity. Because the philosophy goes, if you buy a stock, let's say maybe around October of last year, and if we hold that for a year, or if we hold it for 2 years or 3 years or 5 years, in theory, over time, the market should go up. That's the theory. That's the buy and hold traditional approach. We'll take a look at a good old stock like Starbucks, and we'll just ask the question, how effective is it? Well, the last couple of years have been some really good performing years for the market. Would you guys agree with that? Yeah, the last couple of years have been pretty decent. We've been making all-time highs. Seems like every other day we've got a new all-time high. And so if we go after a great company like Starbucks that everybody loves to drink their coffee even though it costs too much, one would think that you can make some money. But let's say that somebody came in here a year ago and they purchased Starbucks. They would have purchased Starbucks for approximately $76.98 a share. That's the price that we opened up at on October 1st. A year ago, 2013. Now, if we held that Starbucks trade until October 1st, 2014, unfortunately, the first day of this year, we were at $74.61. So we lost a little bit of money. But it wasn't all a loss. After all, at one point during the year, we were in extreme profitable territory, trading as high as $82 a share, which would have given us, of course, $6 per share profit. At one point, we were up here at $81 a share. That was a high point. Of course, most of the time, back in February, we were way down here, $70 a share. So that was a $7 loss. We rallied back up to about the point that we'd purchased at. Then we sold off again, back down to about $70. In other words, Starbucks has been a bit of a roller coaster. Despite the fact that the market's been making all-time highs, despite the fact that from everybody's general consensus, things are going up, if you go out and you buy a company that you think should be good, a company like Starbucks, well, it turns out that in actuality, it was just a roller coaster. This is traditional wisdom. Traditional wisdom says go out and buy a stock and hold it for a long time. If you've been with me at all for any amount of time, you know that I do not buy into traditional wisdom. In fact, I think that it is a recipe for disaster. What I would much farther prefer is more of an active trading approach. If we took the same stock during the same time frame, look at all the opportunity that we had. From buying in at $76.98, if we were to just hold it for the majority of that move, we had about $3 per share profit opportunity, and this only took us 2 months to acquire. Now, over the next several months, the next 3 months, we had another $5 per share trading the downside. But you see, most people have a problem with this because right here, what do we've got? we've got a mindset issue. It's a shift in philosophy. Most people believe you need to buy a stock and hold it. Well, here's what I'm telling you. To make this $5 per share profit, we had to sell the stock. We had to short the stock. That requires a shift in mindset because most people are not comfortable doing that. Well, before we knew it, the stock rallied a little bit. Then it sold off again, giving us another $3 per share profiting opportunity, again, requiring a bearish trade. Now, following that, we had a $6 per share profiting opportunity. This was the normal opportunity where you can just buy the stock and you can hold it for a little while. But instead of taking a year, it only took us a couple months. And then from August forward into October, if you sold short and then bought to cover the first of the month, you're looking at about a $5 opportunity, depending on exactly when you got in and out. And of course, the trade has continued to go further down from there. Now, compare these two schools of thought. The traditional trader would have bought Starbucks and held it for a year and wondered why they were so seasick on this roller coaster, whereas the active trader could have jumped in, made $3 per share profit, another 5, that's 8, another 3, that's 11, another 6, that's 17, another 5, that's about $22 per share profit if I did my math right on the fly. Which one looks like it's a more exciting roller coaster? Obviously, being the active trader is the more exciting roller coaster. Now, here's the pushback that I get from students, especially those who've not seen me do this in action. The pushback that I get is they say, well, Jeremy, you didn't know that you should sell here, and you didn't know that you should buy here, or that you should short here, or that you should cover and buy here, or that you should short over here. How can you possibly know that Starbucks was about to turn every 2 months and take a cycle in the opposite direction? How many of you are feeling that right now? How many of you, just listening to me talk, who has this idea that, Jeremy, there's no way that you could have known this? Anybody giving me that pushback? Dan, thank goodness. I was afraid I wasn't going to have any naysayers. Anybody else? Ivan's giving me pushback. That's great. Dan and Ivan, this system right here is the most simple form of a trend following system. Let me show you. This picture right here is our moving average system. I'm going to teach it to you here in level 1. It's one of the most simple systems you can follow. And over the last year on Starbucks, it has given us, I did it from October 1st, but in truth, the signal came back over here. It has given us 6 entries into the market. It gave us a buy entry here. It gave us a sell entry here. It gave us a buy entry here, a sell, a buy, and a sell. Now, I've highlighted this particular section in yellow because the entry from this buy signal to this sell signal was a loss or a barely break even. So out of these 6 signals that we got from this one particular trading system, 5 of them were profitable. They were profitable for approximately the dollar amounts that I gave you. And one of them barely lost a little bit of money, but it didn't lose too much money. Again, here's the thing that I'm trying to get across. If we want to be successful in the market, it requires a shift in philosophy. It requires looking at the market through a different perspective. And when we start to look at the market through a different perspective, we start to see things that we could not have seen before. If you're giving me pushback and you feel like you could never know the turning point, that is a reflection of a story that maybe has been embedded into your thinking process over the years. A story that says you can't time the market. For example, there's a very famous financial advisor, talk show guy, Dave Ramsey. It's one of his mantras. You cannot time the market. I'd love to go toe-to-toe with him and prove to him that you can time the market. Those who can't time the market simply don't know how to time the market. And so the challenge that we've got when we're going to start trading more actively is to learn to identify the market turns, and in identifying the market turns, be able to get into the appropriate direction at the appropriate time, while at the same time limiting our risk. Dan, if I could teach you how to do that, do you think that this would be a trading system that would be worth learning? A system that would be worth taking the time to not just have the knowledge of, but to actually perfect and be able to put into action. I'm going to propose to you that it's going to be a very profitable system. Now, you may be wondering, why should you be listening to me? So I'm going to just do a quick toot my own horn. I actually really hate doing this, but I've had enough people tell me I need to toot my horn more, so I'm going to toot my horn. Let me tell you a little bit about myself. My name is Jeremy Whaley. I'm the co-founder of TradeSmart, along with my business partner, Josh. I've been trading the market for a long time. I started trading the market back in 1999, actually when I was in college. A college girlfriend that I had, her uncle, introduced me to the market and started teaching me about trading. I've been associated with the Market Technicians Association. I do hold a couple of series licenses, the 3 and the 34, which is for Forex and futures. I've not worked inside of a professional firm with those, but we did that as part of our introducing broker that we set up a couple of years ago. I've been teaching people like you for more than half a decade now. We're sitting in 6-7 years of being in business. I speak for a lot of different groups. I've spoken for groups like the Canadian Society of Technical Analysts, given literally thousands of lectures on trading. And classes like this that you're seeing me do right now, I've put together over 140 of these programs for people like you. In other words, I not only trade, but I also can teach people how to do it. Now, the big issue is people say, well, Jeremy, if you're doing this, if you're doing it for real, well, then why would you teach? And the answer is because I love watching people's lives change, and I love watching their eyes light up when they finally get it. The truth is, I don't have to do this. I choose to do it. And, the proof is in the pudding. So what I like to tell people is I eat my own cooking, okay? I do exactly what I teach you guys to do. And what I decided to do, just to be transparent with you guys, is to give you a little bit of a running total. I'm not going to do this all the time, but as you're getting into the TradeSmart system and you're saying, can I trust these guys? I feel like it is fair to open up the books just a little bit. So these are my last 10 trades that I've placed. The first one I placed back in August 15th here, up through as recently as yesterday. And over these last 10 trades, I'm profitable on 80% of them. The ones that you see in light green, these are still open, and they are profitable to the numbers that you see, 57%, 23, and 25. The ones that are in dark green are closed out, actual cash in the pants. And the ones that you see in red are losses. Now, I would like to point out a couple things about the losses. This particular trade right here, you do see it's 100% loss. The reason for that is because I did something that I never teach you to do, but occasionally the gambler in me gets the best of me and I have to do it. And I took a gamble, and I knew it was a gamble, so I bought some puts that were a little bit of a risky trade to see what would happen, and I knew that it was a win big or it was a lose all. So that was, in fairness, that's what that trade was. And in fairness, for the second trade, you're going to notice that as soon as I closed this trade out on the 18th, I got stopped out, took a 50% loss on it, but 4 days later, I re-entered the exact same trade, and we ended up with 159% profit on it. So, in truth, if you really look at it from that perspective, it's been a pretty good run here. Now, in full disclosure, I assure you that the next 10 trades will probably not be that perfect, but consistently, I get between 60 and 80, sometimes as many as 90% of my trades out of any given 10 trades will be a profitable trade. Now, some of them will be for 5 or 10% profit. Some of them will be nice, 150% profit. I do not promise you that you will make those kind of profits on every one of your trades, but I do promise you that what I'm teaching you is real. And this next slide, I'm really only doing this just so you know that it's not me being a superhuman. The stuff that we teach is specifically for people like you. So I've got some quotes here from Ron and Bill, a couple of our students. Ron did a similar trade, 267% in just 2 trading days on, what was his trade on? This was on Netflix, okay? So that was a big mover for Ron here. Bill did a similar thing, 8.5% in just a week. Not too bad. And here's what he says. He says, I'm making money based on sound analysis rather than dumb luck. And that's the key. That's what I'm trying to teach you guys here, is how to do great sound analysis. Now, the next one I want to share with you is from Mark. He made 31% in 7 days, okay? I'm just showing these to show you that what I'm teaching you works, and it is worth taking your time to learn how to do it. Okay, that's really all it's about. I'm not here to sell you on stuff. I just want you to believe that what you're getting into is worth your time. So here's my promise to you. My promise is I'm going to teach you to trade like I trade. I'm going to teach you how to think like I think about trades. And I've got thousands of students now that we've taught this process to, and they can tell you after time they learn to think like I think. I'm going to teach you specifically a 5-step to trade confirmation process. I'm going to teach you how to use options. The reason that I can get large percentage returns is because I use options. And so, in full disclosure, maybe I make 150% on a trade, but that doesn't mean my entire account goes up 150%. Because when we get towards the end of the program, you're going to learn about account management, and you're going to realize that I may only risk 5 or 10% of my account on any given trade. And so if you're putting 5% of your account, maybe you make 150% of that 5%, but that means that your overall account may have only gone up 5% instead of 150. So don't look at those high percentages and assume that every trade or your entire account will grow that much. That's just for those individual trades, for the amount of capital that we put onto that particular trade. But I'm going to teach you how to use stock options the way that I do it. I'm going to teach you how to do the right analysis. This is really important, and most importantly, I'm going to teach you the information that you need to be a great trader. Okay, I promise you I will deliver this information. So as we start this journey together, I think it's going to be fun, and I'm excited to see how you guys all learn as we move forward. So starting the journey, here's where we're going to start. We're going to start with the chart. Okay, we're going to start with the chart. This is pretty basic if you've been to any of our classes before. If you've not been to any of our classes, this is really important. This is the very beginning. So we're going to start with the chart. So as we start our journey, again, my goal is to help you achieve your goal. I know that your goal is to make money. So here's how you're going to trade for a profit. The first thing you've got to be able to do is you got to be able to read a stock chart. I'm going to teach you how to do that starting tonight and starting in the next class. The next thing you got to be able to do is to pick a direction. Dan, Ivan, the reason that we can make money on quick swings is because we've learned how to read the stock chart and we've learned how to pick a direction. I'm going to teach you how to do that so that the next time you come through this class and I ask the question, who here thinks I can make this up, you're not going to be the one who's raising your hand saying that you're skeptical. You're going to say, yep, I've seen how he does it, because I'm going to show you how to do it. So I'm teaching you how to read the stock chart. You got to be able to pick a direction. We're going to teach you how to do that. And you've got to be able to apply the right strategy. I will teach you all 3 of these things. Tonight, we're going to start with the stock chart. This is where everything begins. So for those of you who have traded, you obviously know this is a stock chart. For those of you who have never traded before, let me introduce you. Never traded before? Meet stock chart. Stock chart, meet the person who's never traded before. Who here has never traded? Just let me know. Who am I dealing with that's never traded so I can be a little more sensitive to you? Has everybody here traded at least some? Or have you never, ever traded? If you've never traded, just speak up. You're good. You're still welcome company. Anybody? Nobody's confessing that. Traded a little, says Anthony. I trade futures, says Tim. Kenneth has never traded. Excellent. David has never traded. Harrison has never traded. Jesus has never traded. Debbie and Christy's only traded a little bit. David trades some options. Okay, excellent. Those of you who've never traded, here's my principle that I teach. Your success in many ways is it's in your hands, not because we don't have the information, but because I don't know to give you the information if you don't ask. So at whichever point you feel overwhelmed or at any point you feel like you need some help, I really would like to request that you would reach out and talk to one of our student success coaches, because what they can do is they'll get on the phone with you and they will point you to the right resource to make sure you don't get lost, okay? So if you will just make that agreement with me that you'll speak up when you feel overwhelmed, I promise you we will provide the solutions that you need and we'll get you the information. All right, so those of you never traded, this is a stock chart. Let me introduce you to the stock chart. All a stock chart is it's the plotting of the past performance of a stock. That's really all it is. And the reason it's valuable is it provides a very good visual representation of the price point where people buy and the price point where people sell. Now, why would this be interesting to us? Well, obviously, we're all buying and selling stocks, so we want to know where they're buying and selling stocks. But more importantly, it's showing us how the other traders feel about a stock. Now, for those of you who are a little scientific, this word feel is a scary word because feeling is something that artists do, not scientists. But if you're a little bit scientific, if you're an engineer, you're a scientist or an accountant, or you're one of those types that likes to deal in fact, guess what? I'm going to break you right out of your mold. The truth is, the stock market is a lot more profitable if you will learn how to recognize how people feel, which means we're not dealing with fact nearly as much as you would like, and we're dealing a lot more with the component of human emotion. So why does all this charting matter? Why do we want to know what people are feeling? Here's why. By studying the historical price performance of a stock, watch what I'm going to say here. By studying the historical price performance, we can better predict the future price performance. Or maybe a better word would be behavior. Let's put that word in there. I should have caught that. Call it behavior. Instead of performance, we can better predict future price behavior. Now, why would this be important? Because of what I just said on the last slide. It's all about the way your fellow traders feel about a stock. The only means that we've got of recording human emotion in the market is the price chart. You can look at all the fundamental data that you want to look at. You can look at all of the talk shows you want to listen to. You can look at all the earnings reports. You can crunch all the numbers. None of that information will tell you the most important piece of information, which is how do the people trading the stock feel about it? What the price chart will do is it will give us a visual representation of where the buying and the selling behavior occurs. And by studying historical behavior, we can better predict future behavior. If this is a philosophy that stretches you a little bit, it's okay. I have a lot of students that this philosophy stretches them. So here's what I'd like to ask. Give me a chance to prove it. What you're going to find after you've given me a chance to prove it is the market is driven almost 100% by trading behavior, even if that behavior is irrational. And so what we want to do as profitable traders is we want to come to the market with an expectation that we can identify what that behavior is. And we understand, of course, that human behavior is predictable. We'll talk more about that in the next class. But before we get there, let me just show you how we read the price chart. The price chart is going to be made up of 4 key price points. We've got the open, the high, the low, and the close. The opening price is, of course, the opening price of the day. The high is the high of the day. The low is the low of the day. And the close is the closing price of the day. Okay, so with 4 key price points, every stock chart has these 4 key price points. Now, in addition to the 4 key price points, we've got 3 main views that we use to present this data. We've got the line chart, the bar chart, and the candlestick. I'm going to teach them each to you right now. The line chart is the most simple. It is only going to use the closing price of the day. And the way we create it is really simple. We just plot the closing price on a graph, and then we draw a line connecting each of the points. Let me show you how it would work. Let's say that we've got a graph here, and let's say that we've plotted each of these price points, whatever they are, $30, $31, $32, $30. We just plot them all, and then what do? You just play the game that we did in kindergarten, connect the dots. This is a line chart. You've all seen a line chart. You see these on television. You see these on GoogleFinance.com. It's the most basic chart. This is the way we would draw it by hand. If you've seen it in a computer form, it looks more like this. It's all the same idea. All we're doing is drawing a line connecting the closing price of each particular day. Now, the line chart has a lot of great benefits. For example, it's easy to see price patterns. Price patterns will form right before us. It's great. It's easy to draw our lines. You're going to learn about support and resistance lines in the next class, and it's easy to do that with a line chart. In fact, it's the preferred way of drawing support and resistance. And overall, it's easier to see the general trend when you look at a line chart. However, what you're going to find if you spend much time with line charts is they frankly don't present enough information. One limitation is they only show that closing price. So I said there's 4 key prices, open, high, low, close. Every stock, every day will have those 4 key prices, but the line chart does not reveal all 4 of them. The line chart only reveals the closing price. And so that's one limitation of the line chart. Another limitation is we don't get a clear picture of true market sentiment. We're only going to be able to get that when we have all 4 price points, the open, the high, the low, and the close. So that's an additional limitation. The next limitation is that if you just look at the line chart itself, we have the difficulty of being able to trade off of that because we don't have all the data. And so the next presentation that we're going to look at is the bar chart. The bar chart is going to take all 4 of the key price points, the open, the high, the low, and the close, and when we start to compile them together, it becomes a lot easier because we get to see overall market sentiment. And generally speaking, it allows us to make better trading decisions. Let me show you how we construct a bar chart. Bar charts, also known as a Western bar charts are going to read from left to right. Okay, so you're going to have the open, high, low, and close in the order that it occurs. So if we're reading left to right, you will have the opening price of the day. That will be marked with a left hash mark. Now, the high price of the day will be marked on the vertical axis along with the low price of the day because that represents the actual day of trading. And then at the end of the day, you will have a closing price. So we're moving from left to right. The opening price is the left hash mark. The high and the low are the extreme high and the low points of the day. And then on the right side, we've got the closing price point, which is the right hash mark. This particular bar that you see here on the left is a bar where the stock closed higher than it opened, as you can see by this discrepancy here. Now, the next bar is the opposite. This is a bar where the stock closed lower than it opened. How do we know this? Well, because of where the price is marked. We're still going to read left to right, open, high, low, and then the close. But you see this closing price was substantially lower than this opening price. And so this is the way that you're going to see bar chart data represented to you. If we stick that all on a chart, it would look something like this. You've just got a bunch of little bars going up and down, and you're just constantly reading from left to right. Now, this is great because it provides some clear data in terms of the extreme highs and the extreme lows, but it's challenging. Can anybody see a challenge to this bar chart? Any clear challenges you see here? Does anybody look at that and think, man, my eyes are going to go cross looking at this? Oh my goodness, what did I just do to my screen? There we go. Let's put this all on one chart, computer generated, the way that you will see it. And notice all these bars start to run together. It just looks like a bunch of lines with more information. It gets a little complicated, doesn't it? Yeah, Thomas says it looks like an old Atari game. Yeah, you kind of have to sit there and think about it. And so the bar chart, it's great because it gives us the extreme sentiment, but it's got limitations because all the bars get confusing. And in order to really see, did we close up or down, you got to zoom in and you got to be able to see all that data. And so the bar chart tends to run together after a little while. And that's why we often use the candlestick. Now, the candlestick chart's going to come to us from Japan. Forgive me. Try this again. The candlesticks come to us from Japan. That's why they're often referred to as Japanese candlesticks. And the great thing about candlesticks is they encompass all of the key information, the open, the high, the low, and the close. But here's the distinction. We get color to the bars. It becomes very black and white, literally. Okay, and so it offers the benefits of the bar chart, but with much added clarity. Let me show you what I'm talking about. If we come over here, on the left, you see a bar chart. On the right, you see candlesticks. You see this bar would translate to this white candle right here, where you have the open, the low, and the high are still in the vertical axis, but the close is going to be drawn up like this, and we're going to have a white candle. Okay, a white candle more appropriately is an open candle, meaning there's no color behind it. But because the background is normally white, it becomes a white candle. Okay, and so the open, the close define, let me say that better. The open and the close define what we call the candle body. That's either going to be black or white. And the color is going to be defined by whether we closed higher or lower. If we have a lower close than open, then the candle is going to be drawn down like such, and the candle body will appear black. This is a colored candle. It has color to it. Now, let me talk about that for a brief moment. Traditional candles are black and white. I prefer black and white. Okay, to me, I'm very traditional in this. If you use a lot of charting softwares, you're going to see them drawn differently. Some of them will draw white candles with green and black candles with red. I hate this. I hate this because to me, I look at this and see two colored candles. I see a green candle and a red candle. I don't see a white open candle and a dark colored candle. And so to me, this drives me crazy. But if you like green and red and you can trade with it, then, more power to you. I personally can't do it. Now, what I don't have a problem with is I don't have a problem with people who choose to color the outside of a white candle green, but you leave the color of the body white and the entire down candle red. I'm okay with that. In fact, I think that's kind of cool. It looks like a little Christmas tree, but it's cool. Also, you'll see a lot of charting softwares like, for example, Options Express. Theirs happen to be colored blue and white. I'm okay with that. I don't really care what the color is, as long as, for me, my brain is telling me that it's a white open candle and a closed or a dark candle that's been colored in. Again, to me, the green and red just tells me two colored candles, and it's confusing. And so I don't like that. But whatever works for you, the principle is still the same. With the up candle or the open candle, you've got a higher close than open. And with the colored candle, whichever color it is, you've got a lower close than open. All right, now if we put all this onto a chart, it would look something like this. And the distinction of this chart versus the bar chart is you can see clearly whether we had a higher close versus the open. Whereas with the bar chart, it starts to all kind of run together. If you put all this on an actual chart, it would look something like this. Same stock, same time frame, but you notice that, okay, that's really distinctly easy to read. And so the benefit of the candlestick is it allows us to see all the price data we need. The color makes it easy to identify. It creates candle patterns, which I've not even gotten into with you yet, but the candle patterns give us great insight into trading sentiment. And at the end of the day, if you work with enough candles, you're going to discover why we prefer trading with candles. Most of the time, we're really going to use two of the views, the line chart and the candle chart. All right, that brings us kind of to the end here. Our journey has truly begun together, and I'm looking forward to sharing it with you. We've got another 7 classes in level 1, and then, of course, we'll get into level 2 and level 3. And by the end, I assure you, I will have taught you what it's going to take for you to be a successful trader. Now, if you don't mind, I have a little bit of bonus content I want to share with you. You can choose to receive this content if you want to. I used to try to put everybody into this camp, and I discovered that not everybody wants to be in this camp. So I put this content here at the end of the class, and if you don't like it, then, just ignore it. But what I have found is there's really a couple of keys that truly separate those who are successful from those who are not. And it really comes down to psychology, and it comes down to the why. I talk about the trading journey. And the trading journey, yes, it's a journey, it's an experience that we go through together, but it's not unlike any other journey. We've got to have some sort of a roadmap that we're moving along. Without a roadmap, we just wander around. And one of the reasons I think so many people struggle to find the success they want is because they find themselves just kind of wandering around, oftentimes for their entire lifetime. And it's not just with their trades, it's with many things in their life. So I'd like to talk a little bit about how maybe we can supercharge the start of the journey. And the way I'd like to supercharge the start is to identify a map. And what a map is a map is going to give us three components. It's going to give us a destination, a beginning, and we're going to see in the middle the road. Now, every journey is an adventure that we get to live together. That's the great thing about journeys, is they're adventures, okay? And so we can start with the destination. This is the outcome. This is what we want. For many of you, that destination is to make money. Okay, we've got a beginning. This is where you are right now. It's the beginning. And so on my map over here, we'll call this cash, because that's what you guys are trying to get to. And over here, this is you. You're starting off. Now, the road in the middle, this is the journey. And the journey is going to have some ups and some downs. You're going to have mountains along the way. You're going to have curves. Sometimes you're going to be stuck in the darkest valley, and it's going to feel like you don't have a reason to keep pushing forward. And sometimes you're going to be at the very top, and you've just had a sequence of trades that were fantastic, and you feel like you're on top of the world. Well, how do you get through a journey? How do you get through an adventure? There's really only one way. And I want to give you that secret right now if you want to hear it. If you don't want to hear it, then you don't have to. But if you want to hear it, I'm going to give it to you right now in the next 5 minutes or so together. Okay, so the way that, in my opinion, we get through a journey is to have a solid, compelling why. How many of you have ever started out on a journey? Maybe it's a journey like weight loss, or maybe it's a journey going to get something to eat, but you don't know what you're going to get. And what happens when you don't know what your destination is? You tend to get lost. And what most people do when they start off in a development program where they're going to go learn something is they get lost if they don't have a destination in mind. The destination is what I call the why. It's the reason. It's the thing that we're really driving towards. And for most of us, that why has been masked by something other than the true, authentic why. And so tonight, I'd like to just give you a little bit of a 5-minute talk and maybe encourage you to uncover a deeper why, a deeper meaning. For most of you, if I asked you what's your outcome, you're going to say your outcome is to go make money. Who would agree with that? Who would agree that if I were to ask you, what's your outcome, you're going to say you want to make money? Okay, Caesar's agreed with me, Robert's agreed, Gene's agreed, and most of you would agree if you're being honest with yourself. And at some point, you had what I refer to as the trading seizure. What is a trading seizure? A trading seizure goes like this. You tell yourself, oh, I need to go make some money. How am I going to make some money? The stock market. The stock market can help me make money. How many of you had that trading seizure? How many of you woke up one day, or maybe it was one afternoon after a really bad day at work, and you said, I need to make some money. How can I do it? Oh, I should trade the stock market. Yeah, it's a seizure. It's okay. We've all had that seizure. Give yourself a hug. You've come to the right hospital now. Now, here's the real issue. Is the issue really the money? Is the thing that's really driving you the money? Or is the thing that's driving you the outcome or the meaning that the money represents to you? Think about that for a brief moment. What's really driving you? Do you want a stack of dollar bills or $100 bills or $1,000 bills? Or do you want the benefit that the money brings to you? For most of you, you would say it's the benefit. And that benefit is going to somehow be related to time. If we don't have to go to work for money, then we have the time to do the things that we really want to do. If we don't have to go to work for money, then we have the time to do the things we want to do and have the financial wherewithal to experience those things and to pay for and to afford those things. Do you really want money, or do you want the thing that money provides? Some people would say money provides power, and that is one way to look at it. But I happen to think of money as just being a tool that we can use as, well, what it is. It's currency. It allows us to trade and to exchange. And so for most people, we've gotten lost in this idea that time is money. And so how can we circumvent that? Well, we just need to get a whole lot of money so that we can spend all of our time spending the money, right? And so this whole idea becomes a really bad psychological mess. So let's try to unpack that a little bit. What if we had all of the time to do all the things we wanted to do? What would we then have? Well, now we've got a little bit of a balance beam. We've got this balance